Sounds good. Thanks, James. So if we can dive into the pack. Great. So I'm here today to talk to you about NextEnergy Capital and the NextEnergy Solar Fund. It's one of my key passions to campaign against greenwashing and all of the noise that you hear in the ESG sector at the moment. And it's a real pleasure to be able to present the NextEnergy Solar Fund to you, which ticks all of the ESG boxes that you want to see as an investor, and actually goes much further than the simple kind of E component of being a solar PV fund, but moves firmly into the S and firmly into the G, and gives you absolute comfort that it's a great place to get a long-term stable return, as well as ticking all the ESG boxes that you want to see. So if we can move on a slide, please. Thank you. So NextEnergy Capital Group is made up of three distinct pillars. NextEnergy Capital is the investment manager. It looks after around 3 billion of assets under management across multiple platform funds throughout the world. It looks after around 1.4 gigawatts worth of PV. A big chunk of that is in the NextEnergy Solar Fund, which I will talk about in a minute. The second pillar of our business is Wise Energy, which is an asset manager. It's the world's largest solar-focused asset manager, and it looks after solar PV from concept all the way throughout its operational life, which means we have a broad spectrum of understanding of how assets perform throughout the entire life cycle of a solar PV system. And the third pillar of our business is called Next Power Development, and that's a development arm of our business that focuses on taking projects from concept through the development process and into the realization phase as well. So what that really means from a NextEnergy Capital perspective is that we have an absolute expertise throughout the organization in end-to-end understanding of solar PV, and that allows us to be in a very unique place to extract value from those assets over a long-term horizon. On to the next one, please. So introducing NextEnergy Solar Fund. NESF is a listed solar-focused investment company, was listed back in 2014, and has grown significantly over that intervening period. It's got 99 individual operating solar plants in it, and around 900 megawatts of operating capacity. It's been a really consistent dividend payer over the time since it listed, and is currently targeting a dividend of 7.16 pence, with a dividend yield of around 7.1%. It's also been awarded the Green Economy Mark and the Guernsey Green Fund status, because it so cleanly ticks all of the green boxes around the way in which it contributes to greenhouse gas emission reduction and the way that it generates its revenue. On to the next one, thank you. So as we can see over the last few years, in the bottom right-hand corner, the fund has grown significantly over time. And really that's through the activity that we've operated in the space, in acquiring new assets and bringing them into the portfolio, and also in developing our own assets from concept through to operations. As you can see from the left-hand side, the portfolio is very geographically diverse throughout the UK, and that really is a benefit in that it provides a lot of stability to the portfolio, and I'll come back to that point shortly, as well as a key benefit for investors within the NESF platform. From the top right hand side there, you can see that over that growth period as well, we've been a significant contributor to reducing greenhouse gas emissions, and also in avoiding fossil fuel consumption as well. It's a key part of the NextEnergy Capital's mission that we transition the world away from traditional generating facilities over to renewable energy, and the NextEnergy Solar Fund has been a key component of enabling us as a business to really drive that change and that adoption. On to the next, thank you. So what does ESG mean to us as a business? Well, firstly, ESG is at the core of everything that we do. We have an in-house ESG team led by a lady called Julia Guidi, who is an exceptionally qualified professional in the ESG space. She sits on all of our investment committees. So every single investment decision that is made goes through a standard investment process in our business and is challenged heavily by our investment committee process. She sits in all of those investment committees, and therefore all investment processes have to tick all ESG boxes as part of the overall investment decision-making process. So it really does bring the thinking around ESG to the very start of all of our M&A activity. I've already mentioned our mission in transitioning towards clean energy supply, and that really does feed through all the phases of our business. And we really look to hang NextEnergy Capital around three sustainable development goals, and those are climate change, biodiversity, and human rights. And again, we'll just tick through those in a few examples later on in this pack as to how NextEnergy Solar Fund really does go far beyond the just the kind of E component of ESG and ticks the S and the G very firmly as well. As you can see from the right hand side as well, just to kind of underline the message on how important environmentally NextEnergy Solar Fund is. On a yearly basis, it generates sufficient clean green energy to power 195,000 homes, which is a significant proportion of the UK's population, supporting them in greening up. On to the next slide, thank you. So a quick reminder on how solar PV works for those who are not familiar. Solar farms obviously capture their energy from the sun. We feed that through an inverter because the energy generated by panels is direct current, and obviously we're all familiar with using alternating current in our houses. We step that power up so that it's suitable for transmission long distances on the grid, and then it is distributed to the end user. As a business, we monetize that sale of energy in a number of different ways. Around 60% of the revenue in NextEnergy Solar Fund comes from a long-term certain government subsidy. A whole suite of it comes from energy that we sell directly into the grid to long-term relationships with utility off-takers, those that you're familiar with buying your power from anyway. We also, however, work with corporate off-takers who are looking to long-term hedge their power price and also to achieve decarbonisation goals as well. And we're one of very few in the UK who've already signed and energised and deliver power to corporate off-takers and have done for some years. And we also have within the fund some post-subsidy solar as well. Very important at the moment that the UK market is transitioning away from historic government subsidies and is now able to deliver incremental growth of PV without the need for subsidy, and we've done a bunch of that within NextEnergy Solar Fund. As an aggregate, that means that the fund has great revenue certainty from its core government subsidy and long-term contracts, but it's also able to benefit from the short-term volatility in power price by rolling hedges of power price into the liquid market, and therefore accessing some of the upside associated with some of that volatility in our subsidy-free assets. That means for investors, we're really able to harness the best returns whilst minimizing any downside risk. On to the next, thank you. So solar PV has spent a long time maturing to where it is today, and has a significant growth opportunity ahead of it. Talking internationally, you can see Bloomberg's expectations of growth in the top left there. You're talking about growing from 830 gigawatts globally to around 7,000 gigawatts, so terawatts worth of power to be delivered out to 2050. And depending on the forecasters, that's kind of a mid-case scenario. So you do see forecasts that go significantly above that. And our expectations in the UK market alone is we move from around 15 gigawatts today to 40 gigawatts of solar PV out to 2040, which shows you that we really are quite early in this significant wave of renewables that's still to come in the UK space. On to the next, thanks. Why solar is so important. So solar has demonstrated itself as a fundamental component of the energy mix. It's done so by delivering both power and returns to investors reliably. So inter-year variation in irradiance and asset performance is exceptionally low in solar PV. Single percentage points variation over time is what we see, and therefore it's extremely predictable and it's extremely reliable. You pair that with the distributed nature of the assets that I showed you in an earlier slide, and you therefore have a very resilient portfolio. So we're not taken out in a big way by grid outages in certain locations, because the portfolio effect manages that risk for us over time. So actually, what you've got in solar PV is a bedrock of an asset that is really stable and is able to generate both returns and clean green power over the long term. The final benefit in solar is the capex reductions that we've seen over the last decade. And when we look at the metric that we call levelized cost of energy, LCOE, that allows us to look at a solar PV station relative to a nuclear plant on the cost to generate a chunk of energy from that asset. So it basically is an equation that takes the capex, the OPEX, and any subsidies and various other components into an equation, and it spits out how much it costs the consumer to generate that one piece of energy. And solar is now amongst the lowest cost form of energy that we can generate. So in terms of the mission and what I set out to do in solar PV, we're at a great inflection point, because it's no longer a green tree huggy decision to put solar PV. Actually, it's the economic choice to do so. So it's super exciting to have reached this point, and it puts PV on the front foot for significant growth in the future. On to the next, thank you. So when I talk about the fact that the kind of E component of solar is of ESG is really well ticked with solar, I don't only mean from the green power that the assets generate. We identified as a business that there are unique opportunities in solar PV to do incredible things with biodiversity. So solar is pretty unique, right? So it's a piece of land that is taken out of the intensive agricultural cycle, and it's fenced off and it's left alone for quite a long horizon. You're talking 25 to 50 years in the majority of cases. And that really allows you to do very unique things with biodiversity. And as a business, we identified the opportunity to create biodiversity protected hubs in all of our solar farms that provide ecosystem services to the surrounding communities. And really what that means is we're not only therefore generating that green power, but we're also supporting the local community and its ability to survive through pollinating the crops that are being harvested locally as well. And over recent years, we've worked with a whole suite of industry bodies to help the various stakeholders understand this importance, and now key institutions like the Wildlife Trust, the National Trust, the RSPB, for example, all recognize the significant value that solar PV can have from a protective nature in solar PV, in biodiversity. On to the next, thank you. A couple of examples here just demonstrating what I'm referring to. So in one of our assets that we've taken baseline studies from, we've managed to see significant growth and diversity increase in a very short period of time. So 500% increase in bumblebee observations, 300% in butterfly, and 85% in plant species. We've even identified some species that have never been recorded in that local area before. So you can really start to see that even on a single asset basis, we have material biodiversity benefits as a fund, and we are contributing to wider societal gains as well. On to the next, thank you. Further case studies in this regard as well. We do a lot of work around beehives. We were one of the first businesses to deploy beehives across a number of our assets. However, we also have taken that further as well. So we've deployed solar thermal beehives on a number of our assets. They're quite unique. They have a heating component that combats the parasite called the varroa mite, which decimates beehives. And this unique technology is being trialed on our assets in order to identify whether it is a suitable solution that doesn't involve invasive chemicals that could potentially be supportive for the beekeeping industry at larger scale. So really exciting pilot to be testing there. And we're also running what we call an adopt a hive scheme as well, which is supporting new people coming into the beekeeping hobby, and what we're able to do through that is provide training and support and a hive to anybody who is interested and in the local area to one of our assets, so that we can really support them in adopting and therefore contributing to the wider community through their beekeeping activity. And finally, a nice study as well in the form of growing chamomile between some of our modules. This is an interesting case study because it allows us to demonstrate that we can commercialize in a small way the growing of crops within the solar plant itself. It's also an interesting case study because the white flowers that you see on the left-hand side of the screen there for chamomile are actually out through the peak season of solar. And the newest technology on solar has a generating face on the front and the back of the module as well. So we're testing whether we can get incremental performance gains from the solar by deploying biodiversity measures as well. So we're right at the leading edge with NESF of deploying these measures and in understanding how they can benefit the industry. On to the next one, thank you. I won't pause too long on this because I'm conscious of time, but as part of this exercise, we are working with our whole suite in NESF of universities and study groups to really help understand exactly what can be achieved through biodiversity and in contributing to wider biodiversity regimes throughout the country as part of our overall mission to really drive the biodiversity message within solar and to create that additional benefit for society as part of the deployment of solar PV. On to the next, thank you. So moving past the E, we also very firmly tick the S box as well. And we do that in a number of different ways. We provide year-on-year community funding from NextEnergy Solar Fund, and we do that to specific causes that are close to the hearts of the local communities in which we operate. And that can be anything from supporting local parish councils and community larders and education schemes, right the way through to rugby clubs and various other things that are of benefit to the communities in which we operate. Alongside those direct community investments, we also contribute around £800,000 to the NextEnergy Solar Foundation. That foundation supports good causes throughout the world and is pretty unique in the great things that it's achieved in a short period of time. So we've provided solar powered lights to refugees in Syria. We've provided fuel vouchers to those desperately in need in the UK so that they didn't have to choose that Christmas whether they put the heating on or they cooked Christmas dinner. We've provided oxygen supplies to India during the peak of the COVID period when they were very short on respirators and oxygen, and various other projects like that are close to the heart of everyone within our business, but also have a renewable theme to them as well. So NextEnergy Solar Fund really does therefore drive additional value in the social side of what we do. On to the next, thank you. As part of our ongoing commitments to the local communities in which we operate, we run detailed education activities. We've taken multiple hundreds of children to sites so that we really can educate the next generation around what a solar PV asset does and how it generates power and why it's a good thing and why they should try to live more sustainably. And alongside that, we also tie in a bunch of education around biodiversity as well. So we tick two boxes, and we have school children and actually our own team members building, all sorts of biodiversity measures within some of our assets, just so that they can gain knowledge and therefore distribute that message into wider society. On to the next, thank you. And on to the next one as well, thanks. So from a community engagement perspective, we also work with the local communities to identify what we call exemplar sites. So from biodiversity perspective, we not only therefore look to mitigate any harm created, which is low by a solar PV deployment, but we also work with specialists in a local area to identify how the biodiversity measures can be deployed on a particular asset to create what we call exemplar sites. And those are really those kind of flagship assets that deliver incremental value to the local community through biodiversity net gain. And then we monitor that net gain and we publicize it to the local community as part of our ongoing interaction with between the solar farm and the community in which we operate. On to the next, thank you. A brief slide, again, won't pause on this, on the NextEnergy Foundation, and you can just see the kind of depth of reach that we have across the international markets in the projects that we've supported through that platform. And on to the next, thank you. Now, finally, on to governance. NextEnergy Solar Fund has multiple layers of governance built within it. It's a listed entity, so you would expect that. Kevin Lyon, who who's chairman of our board, has multiple years of experience in the fund management space and private equity space, and he is ably supported by a whole complement of other board directors who provide that very top layer of governance to NextEnergy Solar Fund. On to the next slide, thank you. At the operational level, you can see here the NextEnergy Solar Fund Investment Committee. That constitutes our founder, Michael Bonte-Friedheim, and also our co-founder, Aldo Bielchini, myself, and also, as I said at the start, our head of ESG. That means that every investment decision that's made by NESF is challenged very hard commercially by those who are in the M&A activity day to day, and from our chief investment officer, but also from a principles perspective from our founder, and also from an ESG perspective from Julia as well. On to the next, thank you. As I said to you at the start, ESG is at the core of everything that we do, and as part of this governance process, the investment process that we run as a business is standard across every single fund within the group. What that means is we're able to therefore whittle down the opportunities that are in the market into the exact assets that we want to select, and we're able to do so whilst incorporating all of the values that we've spoken about so far, as well as ensuring we get the right investment case built and that we get the right investment returns over time as well. So it's really core that investment process is really well understood by all players within the business, and that those key actors are within our governance process to ensure those outcomes are achieved every time as well. On to the next, thanks. So conscious of time, to just wrap up what I've said today. So NextEnergy Solar Fund, large portfolio, extremely stable, really reliable dividend payer. The solar market in the UK and internationally extremely exciting, at the forefront of a next wave of growth. NextEnergy Solar Fund again is a nice clean tick box from an ESG perspective when you're an investor, because you can see the green benefit of the power that it generates. But I've also taken you through a whole suite of additional measures that we deliver to support both E and the S, and also taken you through the detailed governance processes that we have in-house as well. Thanks, James.
Thank you, Ross. That's really interesting. I love the idea of planting white flowers so that you get more solar power generated. That's quite clever. It's cool, isn't it? There's questions coming in. If anyone else has got any other questions, put them in the Q&A function. I think we'll start with an interesting one. So quite often when you got renewable power generators talking about the amount of power they produce, they talk about it in terms of the number of homes that it powers. So what percentage of the total electricity market in the UK is homes? Any idea?
Off the top of my head, I don't know the answer to that. I can answer it slightly differently though. So PV generally generates around kind of 3 to 5% of the power that we use in the UK in aggregate. So it's growing significantly. It's expected to be around kind of 10-15% by the time we get to 2050. In most base cases, it could be even more than that. Okay. And that includes all the industrial users as well.
With things like sort of rooftop stuff as well, as that including that, yeah. Okay.
Correct. Yeah.
Now talking about the fund, so you've got at the moment the biggest yield in the renewable energy sector. So the question is, how sustainable is this? But you can talk about your sort of dividend policy generally, that'd be helpful.
Yeah, sure. So we are a very reliable dividend payer. We have a progressive dividend policy, and we are very, very selective about the assets that we bring into the portfolio. So as I've said already, that underlying portfolio is extremely reliable. We have long-term agreements in place around how we deal with the power price. We also have that inflation-linked government incentive as well, and that therefore puts us in a great position to long-term service dividend commitments for the platform. Alongside that, we've got exciting growth opportunities ahead of us as well. We've just signed a joint venture for battery storage within the fund as well, and we see significant opportunity, and we really like the complementary way that the batteries generate revenue to the solar. So we will be expecting to deploy quite heavily into that space alongside additional solar PV growth in the future as well. So I mean, short answer is the fund is in a great place to continue to do what it does best for investors over the long term.
What's the impact of rising inflation on that?
So it's a great inflation hedge, NESF actually. So obviously it has those incentives that I've spoken about. There are inherent links between inflation and power prices, we all know anyway. So the majority of that revenue line, it has a positive trend towards inflation. OPEX in our platform has been managed very carefully, so it's been reduced significantly over the last 5 years. And there are components of that are inflation linked as well, but you know, the incremental growth in the revenue line is not kept pace by the increase in the OPEX. So it's a great place to be from an inflation perspective.
Are you noticing some inflation in the cost of new modules?
We are actually, yeah. So there's most recently been a number of, like a perfect storm of macroeconomic factors in the module production market that has meant that there's been a recent spike in module pricing, something that we sort of anticipate to be around for the next 12-18 months, and then we'll start to tail back down the way. I think it will be a few years before we get back to where we were in 2019, but certainly we'll start to see that downward trend as the market kind of works its way through a bunch of stuff, and it is a perfect storm, right? So it's everything from shipping costs to Brexit issues to supply chain constraints, and also to China's regulation around energy usage, constraining output from PV manufacturers as well. So yeah, it's all of these measures mixed together, and the industry will ultimately find a way to get through that to increase capacity of output of modules, and therefore the price point will reduce again.
Cool. Okay. So just to be clear, just because somebody's asked it, the subsidy income is index linked, isn't it? That's to RPI, isn't it?
Correct. Yeah.
Yeah. Okay. Good. Thank you. In terms of like engaging with investors, have you done anything particular to engage with younger investors?
Funnily enough, it's a great question. Funnily enough, it's something we've been talking a lot about recently. So we've been doing more work in the retail investor space over the last 12 months, and a part of that exercise is to really start to build social media campaigns and to start thinking about how we tie not only education around our core message on that I've spoken about already around green power and biodiversity, but also on supporting education around investment, and also in kind of broadening our reach to retail investors as a whole. So I think kind of multiple facets to how we're attacking that problem, but it's certainly in our mind to continue to spread the message around NextEnergy Solar Fund.
Cool. I know just one thing I've noticed in the media that quite often when people sort of moan about solar farms, they talk about perfectly good agricultural land being sort of carpeted with solar modules. Is that true? Is that something that we should need to think about? Or?
So I mean, the honest answer is no. I think the industry as a whole has a job to do to educate wider society better. And again, that's something we've been working with the Solar Energy UK, so the trade body, about. So what we don't do as an industry is capture all this amazing biodiversity knowledge that we have and benefits that we've created, and aggregate it up and really show at a UK scale the benefits that we've had. The majority of PV assets are actually dual use anyway, so we do take them out of the agricultural cycle, but it's usually low grade land that's selected. So you're talking kind of grade 3B and lower, and then it's dual use. So we graze those assets with sheep rather than cut them, and then obviously the biodiversity measures I've talked about at length as well. So there are significant benefits to be had out of a solar PV farm that kind of offset the change in use. From a farmer's perspective, it's a great piece of diversification. We know the farming industry is always in a difficult place in terms of margins. Having the diversification and the income stream from a solar PV farm as a part of a farmer's portfolio is a significant benefit to supporting that farm's long-term existence as well. So there are multiple reasons why it's a great part of society, and actually PV covers less land than airfield does right now. So from a macro perspective, we really don't have a significant claim on the landmass in the UK, and we won't have even if we drive to those ambitious 2050 goals.
Okay, cool. Question here about Eel Power.
So Eel Power is our joint venture that we signed for battery storage. So just to cover that very briefly, We see a significant opportunity in the standalone battery space. Obviously, we have those 99 assets which already have exports, power export contracts with the grid. We also see the opportunity to bring assets that are not co-located physically with any of our assets into the portfolio, and we've decided to do that through a joint venture. The reason we've done that is we've seen the battery storage market maturing significantly over the last few years, and it's done that in a number of ways. It's done that through reducing capex. It's done that through maturing the way in which you monetize those batteries, and it's done that also through deployment as well. And Eel Power is at the forefront, in our view, of companies that have that track record, and they have the team in place to help take a concept through the build process and on into to long-term monetization. The reason we wanted to sign a joint venture is to de-risk the scenario for NextEnergy Solar Fund. So we wanted a long-term partner who really gets that technology alongside NextEnergy Solar Fund and motivated by outcomes. So that's really why we selected to do a joint venture, and Eel were the result of a very comprehensive work through of the market in terms of participants. We've already selected and acquired the first kind of maiden investment for that JV. It's a 50 megawatt battery that's going to be located in Scotland, a nice congested part of the grid because of the wind generation up there. So it benefits from being able to provide exceptional services to the grid alongside the arbitrage game. So working that volatility in the power price. So in the power market, so it's buying low and selling high in the power market as well. And it creates a really nice, well-rounded business case. And as I've said already, it generates in a kind of counter-cyclical way to solar as well. So as an overall revenue stack for the fund, it's a real nice piece of diversification for us.
Sure. I'm sure this is something you've thought about, but the question is China using coal power to produce your panels?
Yeah, so it's something the industry is working through at the moment. There have been a number of challenges around the underlying components of the supply chain in PV. And really, it's not for producing the modules themselves. So that manufacturing process is really well understood and is really clean. We have all of our manufacturers sign up to our codes of conduct, which ensure that they are free from risk in anti-bribery, anti-corruption, in human rights, and a whole suite of other local and international laws. But the underlying silicon supply market is much more opaque, and there have been challenges around risk of human rights abuses in there, and there is also a significant amount of coal power used to generate that silicon. So something the industry is working through aggressively. We at NextEnergy chair the Solar Energy UK's supply chain working group. So we are coming up with protocols to support industry specialists in working with manufacturers to really gain transparency and auditability throughout the supply chain, to work those issues out over time. The UN, whenever you identify an ESG issue, suggests that absolutely the wrong thing to do is to walk away from a supply chain, and absolutely the right thing to do is to work with that supply chain to clean up its act. That is absolutely what the industry is intending to do, and we are part of the conversation to lead that. Okay,
cool, thank you. I'm not sure whether the maths is right, but I'll let you answer this. But in terms of the amount of power you produce for the capacity you've got, is there a way of increasing your utilization rate?
So PV has a relatively fixed utilization rate. Technology improves over time, as does the efficiency. The bifacial modules that I mentioned before step that efficiency rate up the way, as does the use of trackers, for example. Trackers are slightly more difficult in the UK than international markets. You see big hundreds of meter long runs in say the States, and that's well suited to deployment of trackers. The slightly trickier landmass that we have in the UK makes that slightly more difficult to realize, but will be part of the mix in the future. We also look at module coatings to perovskite coatings that improve efficiency of modules as well, and we're trying and testing various different pieces of technology, and efficiency has improved over time. The way in which we we start to think about solar in the future is slightly more dynamic than it has been in the past. So that, the co-location of battery, the integration of battery within PV allows you to really kind of maximize the use of land and generate power in an optimal way on the site, but then use the battery to manage how it interacts with the grid. So you're kind of making the best use of that available land. Industry obviously continues to work on efficiency over time, and one of the key things we've done is to increase the power density. So a single solar module when I started out was 125 watts, same slightly larger footprint, but call it same footprint for want of comparison, is doing around 500 watts. So you really are, you've seen that transition in how effectively we're using that parcel of land.
So what sort of efficiency rate do you get? What sort of production do you get for a megawatt of capacity?
So it depends on the specific technology that's been deployed, but you're really talking anywhere between kind of 10 and 15% utilization rate.
Okay, cool. A couple of quick questions just on the fund. So what about M&A within the sector? Is that likely?
At fund level, you mean, or continue kind of growth?
I mean, elsewhere in cross-investment companies, we've seen actual companies being bid for. We haven't seen that in renewable energy. Is that something that's possible, do you think?
I mean, it's obviously possible given the nature of the funds. I think it's unlikely in the short term. I think we could see it over time. The markets that we see participating in this type of an investment play are either interested in supporting a manager in growing a fund at this point, or they're interested in doing kind of direct investments themselves. So there isn't really that kind of transitional play out there. But yeah, I mean, I would expect to see consolidation over time for sure.
Okay. There's a question about, are you likely to raise more money?
So obviously the nature of the business makes it difficult for me to talk about that. What I can say is we've got an extremely healthy pipeline, and that reaches 300 million in size, and that's across those various different diversification areas I've spoken about already. We have already got some rolling credit facilities which give us sufficient firepower to start down that road, but won't necessarily get us to the end of it. So you can kind of read your own outcomes from that. But yeah, we intend to be actively growing the fund over the next couple of years. And
do you invest more outside the UK as well?
We do, yeah. So we've obviously got a small Italian portfolio within the fund that was acquired back in 2017, been extremely successful over that time, and we are actively pursuing direct investments in international markets that we like as part of that growth wave. We also invested in a private renewables fund that's also run by NextEnergy Capital. It's an OECD focused fund, and the benefit of that is it not only gives us the ability to step into that existing portfolio, so we're not taking construction risk in the early assets. There's already operational seed assets in that portfolio with additional assets being acquired all the time. That gives us nice geographic diversity, but we're also able to co-invest with that platform as well. So again, over time it would be reasonable to expect us to kind of leverage off that relationship and really build some additional international diversification from that perspective as well.
Okay, thank you. And what were your thoughts on COP26?
So I think two layers to me. At macro scale, I think the outcomes were as good as kind of been hoped for. Extremely complicated macro drivers going into this and stars not necessarily aligning in the same way as they did back in Paris. So I think it's to be commended that we have got some progress in the right direction, and turning the dial down, as Boris has said, is of value to all of us, right? And I think the key takeaways from COP are that, as one of your previous speakers says, I think we get it now in the UK. I think a number of other countries really do get it. There are obviously laggards. There are obviously countries that are dealing with significant challenges in their own economic growth profile and how they do that whilst still ticking decarbonisation boxes. So we're at the very start of this journey, and it needs to happen quicker. So that from a macro perspective is important. I think Boris's messaging around ensuring we didn't think we'd won this battle at the end of it, and we really needed to work harder to further turn that dial down was important. But from a UK perspective, I think there are so many reasons to be optimistic. So I went up to COP26, and it was great to be amongst peers, all of whom are doing their bit to create tangible change on the ground, and it was really satisfying to be part of all those conversations. It's great that we now have a stepped transition plan in the UK. We didn't have a plan before. We've been crying for one for years. So I see lots of reason to be optimistic, and obviously we have significant mountains to climb, but it's one of the reasons why platforms like NESF are so important and have such great growth opportunities ahead of them.
Are you invested in the fund?
So we don't really talk about our personal investments. I am invested in the fund. The board directors we publish are also invested in the fund. We obviously allow our team members to invest. We have very low turnover of staff. Everybody really loves the platforms that we operate. So again, you can kind of read through that to the way in which we approach our vehicles.
And so how much money are you running across the whole company?
So we've got about $2.5 billion under management at the moment. That's growing quite significantly. That international fund is kind of closing new capital all the time. We have further funds in the pipeline at the moment as well. So it's a really exciting place to be at the moment as we continue down that growth wave and in achieving that mission of really commercializing renewables and supporting capital coming into to value add investments.
Cool. And sort of cycling back to the economy again. One of the things that people have said is perhaps interest rates might start to rise. How sensitive is the discount rate that's used to value the NAV to interest rates?
So there is obviously a linkage there. The majority of how assets are valued in the UK space is based on kind of long-term expectations of power price, and it's very sensitive to the availability of projects, the capital that's trying to move into the space, the fact that the industry so well ticks ESG boxes. So yes, there is an inherent linkage, but actually it's driven by a whole bunch of other factors that drive the discount rate down the way, because it's such a reliable asset class, and we've seen that discount rate move materially over the last 4 or 5 years, down from kind of double digits or maybe just under double digits down to 4, 5, 6% territory, and that's really where I expect discount rates to be for majority of jurisdictions throughout the world, from a PV perspective in the future as well. So it's that kind of a range that we expect to see as different markets mature.
Good. I think we should probably wrap it up there, but that's really interesting. Thank you, Ross.
No problem. Thanks a lot.
We covered a lot of ground, and there was one question left about the drivers of performance this year, but I think people can go and look at your latest reports to get that information.
Yeah, our interims are due out shortly as well, so that would be a great place to dive into the detail.
Brilliant.